Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, we're going to talk cold storage today. We'll take a look at livestock slaughter. We'll also talk a little beef cow slaughter in there as well. And preview next week's cattle and calves inventory report coming out. But to kick things off, let's recap what happened in a very positive week in the markets.
Yeah, for the first time in a while, I think we can talk about everything being higher on the week that we normally discuss in this. So when we look at fed cattle prices this week, up $1.45. If we look at the feeder cattle markets this week, so I'll say a strong undertone, but we still had weather affecting a lot of those markets. So really not enough to get a true test of those markets. On the futures side, February live cattle futures contract was up $4.35 this week. And the March feeder cattle contract was up $7.95 on the week. Choice box beef was also higher this week, up $4.50, making that now puts it $30.60 above where it was a year ago at this time. On the hog side, cash barrels and gilts were $1 higher this week. The February lean hog futures contract was also higher, up $4.35 on the week. And the pork cutout value also gained this week, up $1.10. And that pork cutout value now sets $9.15 above where it did a year ago.
I don't know what magic happened this week, but we'd like to see more of that as we move along in 2024.
Yes, one observation doesn't make a trend yet for market moves higher right now.
Maybe we can talk about that if we have 2 or 3 more weeks of activity like we had this week.
Just don't jinx the markets here.
I will do what I can not to make any negative impacts. We're going to talk weekly slaughter numbers. Speaking of big weeks, a pretty big week in itself for hogs specifically.
Yeah, if we look what USDA is telling us for the week ending January 27th, a run on the cattle side of 618,000 head. That is 1,000 head higher than what we did last week, but 35,000 head less than what we did a year ago. On the hog side, as you alluded to, a pretty big run this week, 2.719 million head of hogs, according to USDA. That's 89,000 head more than we did last week and 173,000 more than we did a year ago.
And while we are just getting the year started, we won't do year-over-year comparisons. We'll bring those back in within a couple of weeks or two. So if you're uncertain why we're not talking about the year-over-year comparison, that's why. Cold storage out this week. As we take a look at that, let's talk about beef and freezers.
Yeah, so both beef and pork lower when we look at what we got at the end of December, 485 million pounds of beef. According to USDA, that was 11% less than we had a year ago. So I think by itself, good news. I always don't want to get overly excited by the cold storage numbers because we get so much production that happens during the month. But that's the right way for us to be moving if you want higher prices. And on the pork side, 427 million pounds of pork in freezers. That was down 6.4% relative to a year ago.
We don't have the numbers in our report, so I'm going to throw you a little bit of a curveball. High path avian influenza has come in again, and we're starting to see more cases of that. What are we watching in terms of what that potentially does to stocks and also egg production as well for this time of year?
Yeah, so I think we're starting to see some implications in markets. Egg prices trying to move a little higher of late. I often like to remind us when we have this discussion about just how inelastic I think demand for eggs are generally. So it doesn't take much of a supply impact like more high path AI cases to get us to move much higher on prices. You know, I guess as we look at chicken ending stocks, if we look at chicken breast inventories, which I think has kind of been some of the slower ones for us, we were actually 2.7% lower at the end of December than we were a year ago. So perhaps we can talk about high path AI if we continue to have cases going forward, creating some higher price opportunities. we'll have to wait and see. I keep saying I think generally the poultry industry is in better stead to handle high path AI today than it was a few years ago. That doesn't mean that it's hard to deal with if you end up with high path AI in your operation. Short of depopulation, there's not much to do. But I think generally the industry as a whole is a little better equipped than we were when the last time we had pretty big price impacts.
Livestock slaughter numbers also out this week, and this is the one that you and I kind of look forward to, specifically talking the beef cow slaughter numbers. Let's start first with beef production.
Yeah, so for December, we got 2.2 billion pounds of beef being produced. That's 1.6% lower than the previous year. But we can start to look at kind of the 2023 year totals, given we're at the end of December. So 27 billion pounds of beef being produced in 2023. That compares to 28.3 billion pounds in 2022. So 4.7% lower. I don't want to underemphasize what I think is the importance of less beef production in 2023, giving us higher prices.
When you take a look at the beef cow slaughter number, obviously we're watching that to see if we're starting to see a slowdown. What do you take away from the December number, but also for the year?
That the slowdown is fading is the very easy answer to that, Megan. So when you look at December beef cow slaughter, 9.3% below a year ago. I think when we would have talked earlier in the year, we would have talked about year-to-date numbers that were down 12%. So we've been seeing beef cow slaughter pick back up some, albeit still below 2022 levels. But when you look at the year as a whole, down 11%, I will still say that's not enough of a decline from 22 to 23 to tell me that we're holding cows back to keep the herd bigger.
We talked about this last week, and I'm going to throw this at you again. What is a number for you that you want to see that shows us slowing beef cow, that would indicate that there's a solid slowdown in beef cow slaughter, or starting to hold cows back?
So I think we have to talk about really an annual slaughter of beef cows that's 7% or less of beginning cow inventory to actually talk about holding cows back. And we're a far cry from that. As I think about 2023, I think we were closer to 9% in terms of how many we slaughtered out of beginning inventory. So we have a ways to go. We moved in the right direction in 2023. We just have to go further.
All right, let's talk pork production.
So it's the other side of the coin when we talk about pork production. Number one, when we get the December numbers here, so 2.3 billion pounds of pork produced in December of 2023. That's 5% higher than where we were in 2022. So we had a pretty good increase in pork production here in the last month of 2023. You look at year to date, all right, so 27.3 billion pounds of pork produced in 2023, more pork produced than beef produced, number one. But when you look at it relative to 2022, we were 1.1% higher than the 2022 level.
I would assume if you're looking at that December pork production number, we'll probably provide some reasoning behind this, part of a reasoning behind the slide that we saw in pork prices and hog prices during the month of December.
For sure. I think, the numbers maybe as we finish the year were higher than a lot of us would have said a couple of months earlier. So I think that's part of the reason why we've seen some lower prices. I'm really curious to watch here the first couple of months. I think if we can get through these first couple of months, maybe we start to slow just a little bit the growth in pork production. We'll have to wait and see where we get in terms of some hogs and pigs report numbers as they come out.
How difficult is that though? Because our pork producers and the industry has become so efficient. I mean, we're, they are very good at doing their job.
So this is the individually, you want to be as efficient as possible. Yet when the industry as a whole picks up that efficiency, it certainly squeezes those producers that are at still what's the most inefficient on the scale that we have in front of us. None of this is exciting to talk about an industry that likely, continues to struggle from a profitability standpoint. At the same time, there's no choice but to grab that efficiency gain when we can get it, because not only are you competing among other pork producers, but you're competing with the alternative meats as well. So we can't get off that technology bandwagon, and it's good in some ways. It just, the effect on market prices have been less than positive, as we all know.
One thing I would assume though, while we are efficient and prices have come down some, input prices in terms of feeding have come down. And that's got to be a positive note for producers right now as we're starting off this year.
That's right. And we can have a lot of crystal ball gazing about those corn prices as we get further into 2024. I keep saying plant a reasonable amount of corn acres and have a decent weather year. And I think those corn prices keep going lower in front of us. And I think that, to me, that's what helps some of these industries that I think have been profitability challenged to try to come out the other side, is what's going to be cheaper feed costs. So now, if you're a diversified operation that's both producing corn and hogs, that's probably not the same win for you.
All right. Before we let you go today, looking ahead to next week, cattle and calf inventory numbers come out. What are you looking for, and what are your expectations if you're looking in your crystal ball next week?
Yeah, so I'm always focused on beef cow inventory just to see what we have. So I will say, as folks look at that report, I would remind them that as the census data starts to roll out, we may get some revisions historically in beef cow numbers. So it's both look at the absolute level, but maybe more important is the percentage change that we're going to talk about. My crystal ball says 3% lower. We'll see whether I'm right. Don't hold me to that next Friday, Meghan, when we have the discussion. But I think all indications to me is we'll be lower. How much lower? We'll wait. But my guess is we could be 3% lower Jan 1 of this year.
Hopefully a good news for a good report next Friday for us. We'll also talk a little restaurant performance and jobs, and those always are important when we're having that demand conversation. And that's going to remain key in 2024.
Absolutely. Some of the news we got out this week of stronger than expected GDP for the last quarter of 2023 maybe only sets the stage for us to talk about stronger restaurant performance index and jobs report next Friday when we get to talk.
Well, we will check in with you then. Have a great week.
You do the same, Meghan.
So our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happened during the day with the commodity markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.